The S&P 500 just closed higher by 0.4%. NVDA moved, materials led all sectors, and the VIX collapsed. Welcome to Invest from Zero, your daily U.S. market wrap. I'm here every single trading day to break down what happened, why it matters, and what you should be watching next. It's Saturday, July 11th, and we have a packed show today. Here's what's coming up. We'll start with a deep dive into the S&P 500, then move to the NASDAQ and the Dow. After that, we'll walk through all 11 sectors one by one, so you can see exactly where the money is flowing. Then we'll spotlight the biggest individual stock movers in the mega-cap space, both gainers and losers, with our stock of the day getting a full 30-day chart review. We'll check in on the macro dashboard. That means VIX, Treasury yields, gold, and oil. And we'll close with 3 specific things to watch before tomorrow's opening bell. If you're new here, this is the show that covers the U.S. stock market every single trading day. No fluff, no hype. Just data, analysis, and context. Hit subscribe so you don't miss an episode. Let's get into it. Let's start with the benchmark, the S&P 500. Today, the index closed at 7,575.39. That's higher by 0.42%, or roughly 32 points on the day. Yesterday's close was 7,543.64, so we're looking at a modest gain. For the week so far, the S&P is up about 0.5%. Bears have had a slight edge this week. The question is whether buyers step in at these levels. Now here's the context you need. The S&P 500 is the single most important number on Wall Street. It represents 500 of the largest U.S. companies and roughly 80% of total U.S. stock market value. When this number moves, it affects retirement accounts, pension funds, and investment portfolios around the world. To put today's 32-point move in perspective, the S&P 500 averages about a 20 to 30-point daily move in comm markets. Today was a day where broad participation pushed the index higher. Breadth was solid. Now, let's move to the other 2 major indices. The NASDAQ Composite, which is heavily weighted toward technology and growth stocks, gained 0.29% today, closing at 26,282. The tech sector was a mixed bag. The NASDAQ came in behind the S&P 500 today, and that relationship matters. When a NASDAQ leads, it usually means risk appetite is strong and investors are favoring growth. When it lags, it could be a warning sign that the rally is narrowing. Today, the NASDAQ lagged, which is worth monitoring going forward. The NASDAQ has been one of the best performing indices this year, and today's move adds to recent gains. Moving to the Dow Jones Industrial Average, it finished higher by 0.29% at 52,637. The Dow underperformed the S&P today. Remember, the Dow only tracks 30 blue-chip stocks, and it's price-weighted, not market cap-weighted. That means a high-priced stock like Goldman Sachs or United Health can move the Dow more than a lower-priced stock, regardless of company size. Blue chips were mostly flat. The key takeaway from the indices: all 3 are moving in the same direction, which shows broad conviction in the market. Now let's get into the sector breakdown. This is one of the most important parts of the show because it tells you exactly where the money is flowing. Today, 10 of 11 sectors finished in the green and 1 in the red. That is strong breadth. When most sectors are green, it means the rally is broad-based, not concentrated. Leading all 11 sectors, materials up 1.2%. In second place, consumer staples at plus 1.11%. Third, communication at plus 1.02%. These top 3 sectors are where institutional money was flowing today. The middle of the pack, utilities plus 0.62%, real estate plus 0.50%, energy plus 0.47%, and industrials at plus 0.45%. Now the laggards. Consumer disc came in at plus 0.33%. Financials at plus 0.31%. Technology at plus 0.23%. And bringing up the rear, healthcare finishing down 0.8%. The spread between the best and worst sector today is 2.1 percentage points. That is a wide spread, which tells you there is strong rotation happening under the surface. Defensive sectors showing relative strength. That could be a sign of late cycle positioning or general risk aversion. I always say, follow the sectors. They tell you the story before the headline does. Now let's look at today's biggest movers in the megacap space. Starting with the number one gainer. Meta, ticker Meta, absolutely surged today, up 5.97%, closing at $669.21. For a megacap stock, a 6% move in a single day is significant. We're talking about billions of dollars in market cap change in just a few hours of trading. This kind of move doesn't happen without a catalyst. Whether it's an earnings beat, a new product announcement, an analyst upgrade, or just pure momentum from institutional buying, something is driving this. The volume will tell you a lot. If this move came on heavy volume, that means big players are behind it, and follow-through is more likely. If it was on lighter volume, be more cautious. If you own Meta, congratulations on a great day. If you don't, the question is whether this move has more room to run or if it's already priced in. As a general rule, chasing a stock after a big up day is risky. But if the fundamentals support it, pullbacks can be opportunities. Rounding out the top 5 gainers. Number 2, NVDA, up 4%, closing at $210.96. Number 3, AMD, up 2%, closing at $557.89. Number 4, Walmart, up 1.5%, closing at $113.90. Number 5, Caterpillar, up 1.5%, closing at $952.41. All solid moves in the green. Notice something here. These winners are spread across different sectors, which is a healthy sign of broad-based strength. Now, let's flip to the other side. The biggest loser today, Netflix, ticker Netflix, dropping 2.78% to $73.37. A decline like this in a major name always raises the question, is this a buying opportunity or the start of something worse? Here's how I think about it. Context matters. One bad day does not make a trend. What you want to check is, has anything changed fundamentally? If the business is the same as yesterday, a down day might be noise. But if you see follow-through selling tomorrow, especially on increasing volume, that's when you should start paying closer attention. The rest of today's biggest decliners. Intel dropped 2.4% to $109.84. Eli Lilly dropped 2.3% to $1,188.58. Oracle dropped 2.1% to $140.64. United Health dropped 1.6% to $424.62. The average decline among our bottom 5 is 2.3%. Significant selling pressure in these names. Something is spooking investors. Selling pressure was concentrated in a few names rather than being broad-based, which is actually a healthier sign for the overall market. As I always say, a down day is not a disaster. It's part of the natural rhythm of markets. Every stock in history, even the best performers over the long run, has had days like this. The key is understanding whether anything has fundamentally changed and whether the thesis for these companies still holds. Time for our Stock of the Day segment. Today, that honor goes to Meta, ticker Meta. Let's put this stock under the microscope. Meta surged 6% today, closing at $669.21. Now let's zoom out and look at the bigger picture. Over the last 30 trading days, the stock has ranged from a low of $542.87 all the way up to a high of $669.21. That's a 23% trading range in just 1 month, which tells you there is serious volatility in this name. Traders love it, but it can be nerve-wracking for long-term holders. At today's close, the stock sits 23% above its 30-day low. Right now, the stock is trading very close to its 30-day high. That means momentum is strong, but also that resistance could appear at this level. Watch for a breakout or rejection. This was the single biggest mover in our entire megacap watch list today. I chose it as stock of the day because when a name this size makes a move this big, it tells you something about the overall market sentiment and what type of stocks investors are favoring. If you're a long-term investor, days like this are noise. What matters is the quarterly and yearly trend. If you're a short-term trader, this kind of volatility creates opportunity. But as always, this is not a buy or sell recommendation. It's just data and context. Do your own research or talk to a licensed financial advisor before making any investment decisions. Now let's pull up the macro dashboard. This is where we check the pulse of the broader financial system. First up, the VIX. Wall Street's fear gauge closed at 15.0, falling 5.1% today. That puts the VIX between 15 and 20, a healthy normal range. For context, the VIX measures expected volatility over the next 30 days using options prices. This is a healthy VIX level. Not too scared, not too greedy. Markets can trend in either direction from here. Next, the bond market. The 10-year Treasury yield rose to 4.57%. That's above 4.5%, putting significant pressure on growth in tech stocks. The bond market is often called the smart money because it tends to price in economic changes before stocks do. When yields move, the stock market listens. Gold fell 0.6% today, trading at $4,104 per ounce. Safe haven demand is fading. Gold is the classic safety trade. When investors get nervous, they buy gold. When they feel confident, they sell it. Crude oil dropped 0.9%, sitting at $71.41 per barrel. Oil prices affect everything from transportation costs to consumer spending. Putting it all together, the macro picture today is mixed. There are some cross-currents that could create volatility in the days ahead. Stay alert. All right, let's close out with my watch list for tomorrow. These are the 3 things I'm tracking most closely heading into the next trading session. Pay attention because this is where you get your edge for tomorrow. Number 1, the VIX moved 5% in a single day. That is a major signal. Volatility is collapsing, which usually means smooth sailing ahead, but complacency can be dangerous. Number 2, Meta made a 6% move today. Does it continue, or do we see profit taking? The first 30 minutes of trading tomorrow will tell us a lot. Number 3, the S&P 500 is up 0.5% for the week. Weakness that could extend if buyers do not step in. Watch for support levels. These are the setups, the catalysts, and the risk factors that I think could move the market tomorrow. Write them down, set your alerts on these levels, and be ready when the opening bell rings. Preparation is the difference between reacting and anticipating. And that is your complete U.S. market wrap for Saturday, July 11th. Today we covered the S&P 500, the NASDAQ, and the Dow Jones. We broke down all 11 sectors, went through the biggest movers both up and down, gave our stock of the day Meta a full 30-day chart review, checked the macro dashboard with VIX, bonds, gold, and oil, and finished with 3 things to watch for tomorrow's session. If you found this valuable, please hit that subscribe button. Turn on the notification bell so you get these episodes every single trading day. Share this with someone who's trying to learn about the markets. Drop a comment below and let me know, are you bullish or bearish heading into tomorrow? I read every single comment and try to respond to as many as I can. Remember, nothing in this video is financial advice. I'm just sharing data, analysis, and my perspective. Always do your own research or consult a licensed financial advisor before making investment decisions. I'll be back tomorrow with another full breakdown. Until then, invest smart, invest early, and invest consistently. This is Invest from Zero. Good night.